Welcome to Stock Talk with Nico Criticos. Today we're going to be doing some in-depth stock analysis on Ally Financial, which is the world's largest all-digital bank. So if you don't know, the stock is up about, let's see, now actually for the year, it's down about 37%. It peaked out at about $55 a share, and now it's down to 32. So this is about a $10 billion company, PE ratio of only 4.7, and a dividend yield of 3.5%. As it says here, they provide digital financial services to consumers, businesses, automotive dealers, and corporate. Operates through automotive finance operations, insurance operations, mortgage finance operations, and corporate finance operations. So they're just like a digital bank. That's the way to think of them. And so we get started here. We can see they have over 10.5 million customers, which is going to be an important number because I'm going to use that to calculate some things at the end. Then if we go through my typical checklist here, we can see that the stock is down, and I do believe it's oversold. It's down over 30%. That's going to get a check. Revenue and net income, if we check that out, we can see they've done a great job over the last couple of years growing revenue and net income. We can see right here that revenue has gone from 4.8 billion 7 years ago to this past year they did 8.2 billion. So good job there. And then right here we have about $1 billion of net income, and then last year they did $3 billion of net income. So that's looks good to me. Then if we keep going, a healthy price, a forward price to sales and price to earnings, I gave a yes on both of those. As you're seeing there, they're growing revenue and net income, and the P ratio is only a 4 or 5 on this, and their price to sales is only a I think it's a 1.25. So super cheap there. Forward PE of only 4. So this company is trading extremely cheap for how much money they're making. A $10 billion company that does $3 billion of profit, that's hard to find. If we keep going, we can see, are they innovative? Do they have a moat? I said yes. I think they're very innovative for being a banking company that operates all digitally. I remember seeing this company years ago, just through the internet, and finding things that would say like they offer the best rates for a savings account, because you can store your money in their accounts and they'll pay you 2.5% or something, which is nothing fantastic, but compared to what other banks like Chase will do, it's actually a lot. So they do things like that. And so I do believe that to be innovative, and their moat is that they're all digital, they're all online, and they have a lot of customers, and they have a strong business model. They're super profitable. So I think this is a innovative company, and they have a strong moat. Is it a growing industry? Yes, I would say digital banking is definitely growing. If we want to look it up, we can see that digital banking about a 14% annual growth rate. So that looks good to me. If we keep going, we can see, do they have a strong and improving average return on invested capital? I said yes, because as we can see here, their return on capital is 1.6%, which is not good compared to for that, right? But if we check this shows us more recent, and we can see here that they've been doing over 10% return on investment for the last year and a half now. So they've done a good job there. And then if we get to margins, we can see that yes, margins are getting better. They were 22%, and I believe if we check here, we can see profit margin of 28%. So it's even higher. And this was coming up from back in 2016. They had negative 16% profit margin. So they've done a great job growing that and improving their margins. Healthy cash flow, yes. Main thing I look for here is free cash flow, but also how much are they investing, and are they growing their operating income? And we don't want them to be issuing too many shares or paying out too much in dividends. So if we look here, we can see that cash flow has gone from 440 million 4 years ago to now almost $2 billion of free cash flow. So that looks good to me. Diverse revenue streams. This one I thought about, but I decided to put not really. This is going to be a no, just because I mean, you can look at it different ways, but I think they're really just a banking company. They offer simple stuff, and so I don't know. I feel like there's different ways to look at it. That one's debatable, but I'm going to put a no. More assets and liabilities. They do have that. If we check right here, we can see that they have. So this is a little bit different than most stocks. It's not normal, because this is factoring like how much money they are managing and stuff, how much money people put in there. So it says $182 billion of assets, 165 liabilities. It's not that all that money's not theirs. It's not truly like that. So it's a little bit different. Yeah, it's going to be a little bit different. So, but they do have positive equity though, so that's good. I guess you could say that because it is, once again, there's different ways to look at that, but 13 companies, so it is a little bit different. Then we have a strong share buyback. I put yes because their share count has actually gone down minus 13% year over year, which is pretty good right here, negative 13%. A lot of companies are having, especially dividend paying stocks, they will have a problem with, or the investors have a problem with a lot of my stocks. If we go back, our insider is interested. No, this was a really big surprise, and this was a bad surprise too, because insiders own less than 1%. So that's not a good, that's not a great sign. But it is what it is. It's not the end of the world. Then is it founder led? How's the team? I put yes because once again, profit margins are high, return on invested capital is high, and it's an innovative business model. It's it's just like a Chase or a Wells Fargo or something, but it's all digital. So it's a pretty good business model, and they offer great products. Since they're all digital, they have their costs are going to be lower, and so they're more profitable, and they can offer better services like that 2.5% savings account and stuff like that. Then, do they have more cash than their average earnings? Yeah, and I put no because they have 1.4 billion in cash, but their average income is 1.8 billion. Just something I look for. I feel like that's a good metric. And then finally, is it healthy dividend? Yes, this is actually one of the most appealing things about this company. If we take a look at the dividend, we can see the dividend is a 3.5% dividend, very respectable. And this is the dividend has been growing 58%. That's good. Payout ratio of 15%. That's huge. That's really hard to find. Now, this past year might have just been a outlier year. Maybe they won't do $3 billion of profit this year. Let's see what analysts have them doing. But they have, even if they made less money, still it'd still be a strong number. So see, yeah, last year 8.6, this year 7.3. Then it's supposed to be even $7 of EPS for next year. So it's actually expected to get worse. Revenue is going to keep looking strong though. So that means customers are still going to be there. They're just maybe they have higher costs, things like that. They're not making as much money per customer. So that's fine. That's understandable. But the dividend is great though. Payout ratio of 15%, and they're making a lot of money. So the dividend is not really a problem. So all in all, if we add these up, we can see that we have a what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 out of 18. So this is going to get a score of a buy. I do like this stock. I would actually consider investing in this. Now, if you're still around, I have something very interesting to show you that I thought of. So this is just some brainstorming thing I did where I wanted to compare them to Chase on a couple different metrics and see what potential does this company have as far as its stock price in the future. So Ally and Chase have very similar profit margins between 28 to 31%, very strong, right? The return on invested capital for Chase, though, hovers around 6%, while we've seen Ally now grow up to 10%, 11% return on invested capital. So doing better than Chase. Chase Bank has a $340 billion market cap with roughly 62 million customers, meaning that each customer adds about $5,400 of market cap. And so if Ally has 10.5 million customers, that means that would show that their market cap should be 56 billion. Now we're not there yet. It's not going to be a direct correlation. Maybe customers are worth more to Chase. I can understand that. Chase is also a bigger, more respectable stock, so people are going to feel safer in there than they are in Ally. Both stocks pay pretty similar dividends, and then the other thing was how much is each customer adding to the net income. So Chase, with their 62 million customers, they have each customer is adding $770 billion, or I'm sorry, $770 to their net income. Each customer is worth $770 of profit to Chase. So this means that Ally could very well be doing $8 billion of net income at some point in the next year or two, right? Because they just did $3 billion. I know EPS is expected to go down for the next year, but if you look at it like that, so let's see, we got Ally having what? Let's see. Chase has about 6 times more customers, right? Chase has about 6 times more customers than Ally. So you could say, okay, 1/6 of Chase is what Ally is worth, right? You could say that. But if we were to say that, then that would mean again, that Ally is a $56 billion company. So right now, valued at 10 billion. You know how I said I think it's possible that this stock is a 50 billion or 60 billion dollar company a couple years down the road. So I think this is a very intriguing investment, and I actually might invest in this sometime soon. But you know, there's only so much. There's a lot of good deals out there, so I can't guarantee anything. But it definitely is an appealing investment. I think it's a good company, good business model, well run, and lots of potential ahead. So thank you for watching Stock Talk with Nico Criticos, and I will see you in the next video.